Good morning, Baker 501 students. I am Joe Barnhill, be your instructor for the next 7 weeks for our course in Fundamentals of Business and Economics and Finance. And just want to introduce myself and say hello to you all. I know we have a small cohort, which actually kind of nice. I'm going to get to know you very well over this next 7 weeks. And I will engage and post in the forum discussions with you. But what I do is every Sunday, I post these weekly videos to kind of give you an overview of the expectations for the week and some insights into your reading, what's going on in the economy or the financial world. So do watch the videos. It will help you. I try to keep them about 10 minutes this week. It might go a little bit longer because I want to make sure to cover some of the main topics of the syllabus and expectations to try to answer as many questions as you have. But a little bit about me. I've been with Baker almost 30 years now. I think actually this coming year in the year 2024, and it's hard to believe it's the last day of the year, but we start this course in the new year. And again, with this course, although it starts on Monday, January 1st, Baker's made it very clear that do not do anything on January 1st. Make that a holiday. Enjoy that day. I actually have to go back to work on January 2nd, so jump in that following day, but do try to get that forum post as soon as you can. So let me go over some of the first let me a little bit more about myself. I currently work at State Tech in Lynn, Missouri. I live in Lisa, Missouri. I come home on the weekends, but I have an apartment up there during the week. So I run the business department at State Tech, and I teach a lot of economics courses. This semester, I'm actually going to teach 3 project management courses, which I'm kind of excited about. It's my second go around, but mostly finance and economics. And I've been teaching economics and finance for Baker University for almost 30 years now. But I've had many jobs in the past related to finance. I was a certified cash manager. I used to have the stress and trying to figure out how to get money every day for Sprint. For about 3 years and worked in the banking industry, but fell in love in higher education. So I worked at various institutions around Kansas City in higher ed, but plan to hopefully retire from State Tech if all goes well in the long run. So let me go over some of the things, the main components of the course, if you will. You're going to have forum discussions. I kind of like what I've changed with this now. Instead of you having to type a lot, what you're going to do is go out and find an article. I like to go look at CNN Money every day. I think it's just a great resource for what's going on in the world of finance and economics and business. But instead of typing, you're just going to do a audio or a video. And there's an option right in there into our course in Moodle that you can just click on and record yourself. It only has to be like 4 to 5 minutes. In fact, I don't think you can go over 5 minutes. But in order to save you some time and carpal tunnel syndrome, I want you to kind of try a different way. It also helps you in this kind of a electronic world that we live in, help developing your presentation skills a little bit, and creates a nice little artifact of what you've learned along the course as we go. You are going to have some vocabulary. Well, one of the things this course was important to me is to kind of develop your kind of insights into how the business world speaks, the colloquialism, if you will. About the language, so you're going to have some Curriculum Studio assignments to help with the vocabulary. I'm a big fan of Investopedia. In fact, one of my friends I saw over Christmas, I was talking to her about tax harvesting, so I sent her a thing on Investopedia. Probably not going to use it this year. Basically, tax harvesting is when you take a loss on, say, a mutual fund, sell it at a loss, and then you get the tax benefit. You just move your money to another mutual fund in the hopes that mutual fund will do better in the future, but it offsets current taxes. You're going to have quizzes based on the chapter readings. You have unlimited attempts on those, so do attempt to get the maximum grade on those. And then you're going to have your readings, in this week course readings, chapters 1 and 2. I'll talk about that a little bit more in a little bit. But the main project of this course, we call like a common assessment at Baker, is you're going to do like a semi-structured interview. I want you to kind of like talk to people in finance. It can be anything from an accountant in your company. It can be your banker. It can be an insurance representative. You decide. But really what you're going to be doing is you can use the questions I've developed in the activity in the syllabus, or create your own questions. And the thing I need to kind of stress here in the research, and I'll talk more about this project as we go along, you do a rough draft in week 5, is instead of actually naming the person, in academia, you just might call this like accountant 1, or a banker 1 or something like that. But one of the things I'm going to encourage you to do, I think you can download Otter voice app. It's free, and you want to record this so you have your data. And really what you're trying to do is see what kind of themes evolve from this. So I'm kind of exposing to you a little bit what we call like qualitative research or workplace research. And workplace research happens all the time. How do we do things better? What does the customer want? What is the current financial environment, and what are the decisions we need to make? So in the business world, we're always trying to keep a pulse what's going on in the economy, what's going on in finance, especially as we've seen recently with interest rates and inflation go so high, but the market really reacted positively towards the end of the year, and you start to see some nice returns because the expectations was the Federal Reserve is going to finally start cutting some interest rates, and it's going to make it a little bit cheaper for companies to borrow and hopefully more people to spend more money. But we'll go over that in more detail in later weeks. But I want to give you a little bit of insight to that. And if you do have questions, do email me. I can always talk on the phone there. You have my information in the syllabus, so I'm going to be available for you, and I can definitely do that. Well, let's go a little bit over the chapter material. And in chapter 1, it's that question of the what, the how, and the whom. We are definitely a service economy in the United States, but one of the big questions comes into play in economics is this concept of opportunity cost. What do you sacrifice or give up? And in business, a lot of times, if you're going to open up another Starbucks store, they probably have these certain expectations of a normal level of profit. We generally use this as an interest rate. Let's say for a Starbucks store, that level of profit is 10%. That store better be making at least a 10% rate of return. If it's making a 5% rate of return, it's still making a profit from an accounting's perspective. But from an economist's perspective, it's not making a normal return. But let's say the expectations was that the store needs to make 10%, the store is making 15%. Well, that's what we say they're making economic profits, and they're doing above and beyond. If you're doing above and beyond, that should increase value in the company. And ultimately, if it's a publicly traded company, it would increase the stock price. But the main thing you're also going to look at in this chapter is the idea of production possibility curve. It really ties in strong this idea of opportunity cost within the economy. It's not a realistic model that we don't only produce two goods and services. We produce millions of goods and services throughout our global economy. But it helps explain this law of increasing opportunity cost. The idea if you're dealing with, say, trucks and tanks, you just can't switch, tank workers to truck production all of a sudden and expect production go way up. It's going to start declining as more and more of these workers I don't know how to do this, so it's going to take some time. So there's sacrifices. And within this production possibility curve, we're a point inside the curve. Think about a place like Ukraine right now, where they're going through all this destruction, unfortunately. Their economy is not at full capacity. But if it's a closed economy, we can't get to a point outside the curve. But as we'll learn in economics, is that anything outside the curve is possible if we engage in international trade with nations that have a comparative advantage in the production of that particular good. That means they can basically produce at a lower opportunity cost, and that's why in the United States, a lot of our clothes, shoes, a lot of consumer products are made overseas, and we trade with other countries, and we get to enjoy more goods and services. So, all right. So for the last thing I want to talk about that chapter is in economics, we like to talk a lot about positive economics and normative analysis. Positive economics are things that we can measure, or we believe that hold true in theory. We can measure the unemployment rate. We can measure the inflation rate. We can measure gross domestic product. We can predict that if we lower interest rates, that should stimulate aggregate demand. Okay. Normative economics is the what we should do. It's a value judgment. And that's especially what you're going to see with the coming presidential elections coming up, a lot of the debate about what should be done about the U.S. economy. And there's a lot of debate right now about what we should be doing. There's obviously concerns in climate change. We've seen in California, I guess recently this past week, about these rogue waves and waves of water coming in. And, if the ocean level is continuing to rise, probably not a lot of people want to insure places in California. A lot of the insurance companies, the farmers, the state firm, they're starting to back out. But even in California, I think they're providing, what they call Cali care, like a health care for immigrants. And, this doesn't come free. So, there's choices that have to be made. So that's what will be interesting. A lot of the debating of the normative is the opinion, the value judgment about what should be done to improve society. And there's still issues with a lot of the distribution of income in the United States and the distribution of wealth. What is the right tax system? And I'll give you just a quick example. In Missouri, this is where I live. My son told me the other day, he's like an 18-year-old in high school, that he's going to get a raise because the Missouri minimum wage went up to $12.15. Well, that's a good example of intervention in the market by the government to try to get to what would they call a minimum wage or quality wage, But a lot of times, especially with minimum wage, most states, the equilibrium wage is well above the minimum wage. It's only if you have a problem, you set a minimum wage too high, and it actually creates more unemployment because employers have to back out of the community because they just can't make their opportunity cost rate of return. Okay, Chapter 2, you're going to look a little bit more at the global view. You're going to look at, you might like to think of the aggregate expenditures approach of how we measure economic performance. GDP is consumption plus investment plus government expenditures plus net exports, the difference between what we import and export. We definitely import a lot more goods, so that lowers our GDP. But in terms of the United States, we are still a world economic power. We're very capital intensive. I would call our economy a socialist capitalist economy. I think in the textbook they kind of mentioned we're maybe ranked like 17th or something like that in the flexibility and freedom of an economy. But again, it's a question of what is the direction we want this economy to go. The Federal Reserve has been raising interest rates. You probably noticed that recently with maybe getting a higher rate of return on your savings, CDs, but that will eventually start going down. But the Federal Reserve did a lot of interaction in the economy to try to have a soft landing, what they're calling that, not have a lot of unemployment. And I think we've been able to do that, and that's good news. The one thing that I would say is that very important to our economy, which I believe and a lot of economists subscribe to too, is this idea of private property rights. You see even many communist nations around the world, whether it's China, Vietnam, Cuba. Cuba not so much, but a lot of these other nations have adopted Western-style economies because in the former systems, they just did not work, So we do know that private property rights are important. So how do we establish those, and how do we also provide equity and efficiency and fairness too? So no easy answer. So anyway, that's all I have for this week. It's a little bit long this week. I'll probably keep it to about 10 minutes next week. But if you have any questions, do ask me questions, whether it's access to any books, materials, quizzes, anything like that's not working. Let me know right away. But I will jump in later in the week and engage in the forum discussions. So I'm looking to hear from your post. And I want you to have a great, happy holiday, happy New Year's, and we'll talk to you online. Take care.